There's a lot of wealth generation today that's concentrated in the most developed markets. And a good part of that is because they can compose easy with each other. I can start a business in Europe, easily sell to Americans, vice versa. If you think about how much unlocked labor potential is there, if you are able to allow some random guy from the Bahamas to plug into the rest of the world, if that person can get capital in a way, as well as, a Harvard grad, how much more could that unlock?
Hey everyone, and welcome back to Brazil Crypto Report, coming to you with another special edition from Sao Paulo in person here. And I'm your host, Aaron Stanley, and today I'm joined by a really special guest. I have Arnold Lee, who's the co-founder of Sphere. So Sphere is a company that's building some really exciting stablecoin solutions that we're going to be talking about here in depth today. Stablecoins are obviously a very hot topic in 2025 in crypto, especially here in Latin America. So we're going to be learning all about Arnold's work with Sphere. Arnold, great to have you on the show.
Thanks so much for having me. It's great to be here.
No, it's a pleasure. Really excited to have you here. Appreciate you making the trip to Sao Paulo just to hang out with Brazil Crypto Report.
Couldn't miss
In addition to some other things, I presume. But, so to get started, tell us the TLDR, what is Sphere? What are you guys building? And then I'd love to kind of get into your journey and your story a bit and expand it from there.
Yeah, absolutely. So Sphere, we're the maintainers of Sphere Pay, which is a cross-border payments API and platform. If the listeners are familiar with the idea of a stablecoin sandwich, we basically use a stablecoin as a unit of account to make cross-border payments easier, faster, cheaper, etc. And I suppose that our secret sauce is that we've really gotten low level with the supposed messaging between financial institutions. There are some things that you can do to make it that much more robust. The account is less likely to go down. Funds are less likely to get stuck if you wire the wire, no pun intended, properly. And then we also are maintaining and developing SphereNet, which is a new type of account ledger built on the Solana virtual machine. And it's intended for financial institutions who want a more convenient entry point into some of the properties of blockchains that we really like.
Tell us more about the stablecoin sandwich. For what is this referring to? What are the components of that essentially?
Yeah, so a stablecoin sandwich is basically there's a local currency in country A, and they want to get it into local currency country B. And so historically, payments company would kind of market make against that pair. You give me country A's currency, and then I'll give you country B's currency. It turns out that if you convert country A's currency into stablecoin first, and then pay out later A to stablecoin to currency in country B, this ends up becoming quite more efficient. Which to the end user just feels like it's a faster and cheaper payment. But I guess goes back to the dollar's role as a very nice unit of account for any type of foreign exchange.
So as an example of that, if I'm going from Brazilian reais into Argentine pesos, using this sandwich method, basically you're converting into a USD stablecoin, reals into stablecoin, into USD stablecoin, and then USD stablecoin into pesos. But the end user wouldn't really even notice that you're going through the dollar. Am I understanding that correctly? You're going through the dollar?
Yeah, exactly. And technology use cases like this, particularly in finance, tend to be the best when it can be invisible to the user. Mm-hmm. But it's the same idea of how maybe if you're going through an AMM and you go against the native gas token first, there's a lot more liquidity between stablecoin and local currency and stablecoin against another local currency typically, just because access to dollar accounts are quite difficult. If you're coming from a very, I suppose, developed market, then you might have access to a prime brokerage or a broker dealer who can give you the best rates interbank. Mm-hmm. But if you don't, then stablecoins are a very nice way to kind of inherit the properties of a dollar being very, again, no pun intended, stable for this type of trade.
Got it. So the idea is that there's going to be more liquidity between the BRL and USDC, for example, and then the Argentine peso and USDC than there would be necessarily between BRL and Argentine peso directly. So you're going to get a better rate by going through the USD stablecoin. Essentially, you'd be able to get a better rate on that transaction than you would if you were just trying to find liquidity between two currencies that maybe aren't, there's not a lot of liquidity on the open market. There's depending on what pair you're using specifically.
Exactly. For the average user, this is true. Although naturally, if you're a large corporate or you're a more quote unquote sophisticated financial institution, then you'll be able to find a counterparty with more liquidity on both sides, BRL, Rs. But for the average user who doesn't necessarily have those currency accounts or a dollar currency account, this is a really nice way to kind of get access to the same thing.
Got it. Interesting. Okay. And that's super interesting. And then let's put like a tack in that, like a thumbnail in that, thumbtack in that. What's the word I'm looking for? Put a pin in that, right? And I want to kind of dive into your kind of your personal background here, because I know I think your parents came to the U.S. from Korea, and you've had a lot of kind of experiences personally with this whole issue of like international money movement and some of the pain points and stuff. So I'd love for you to just maybe give us some background on like why is this a problem that you've decided to start building solutions for, and maybe give us a kind of overview of your crypto journey as well.
Yeah, never really expected to be a startup founder. Never imagined to be working within crypto or payments. I remember my much smarter little brother showing me Bitcoin in 2009. And it was a very nice way for, two kids without bank accounts to be able to buy access to World of Warcraft. But, it's one of those memes where like it's a lot easier to, I suppose, connect the dots looking backwards. Stories of like parents sending literal, money in envelopes back to Korea. Korea's done a lot better in the last few decades. But in like the 1960s, 70s, 80s, the GDP per capita started about the same level as Afghanistan. And there were some circumstances that led to Korea doing really well. But I'd argue is more of an exception. And so, when you try to bring a currency from where you come from to say like America, and it's not worth very much, you basically have to start from zero. No credit score, their employment history is basically unrecognized. And you don't have any money that you can bring over to kind of prove that you are a credit-worthy actor who deserves a bank account, who deserves a loan. And so, looking back, it kind of makes a lot of sense as to why me and my co-founder, Luigi, who went through something similar in the Caribbean, his parents migrating from Guyana during like the whole, authoritarianism regime in the 80s. It makes a lot of sense why payments and I suppose financial applications through code interested us. You kind of see the second order effects of having to start over, needing to work at like 7-Elevens as like a security guard, kind of doing like blue collar labor for decades, even if where you originally came from, you had already kind of, went to college and kind of had a more normal white collar career path. The confluence of these, crypto becoming a thing more so with Ethereum in 2015, 2016, me and Luigi meeting in college in New York at the time, and sort of our shared experience of growing up in the middle of nowhere with families that had to start over kind of made things like Tether, USDC, and I suppose the notion of like a digital dollar really interesting to us. Like you can super easy explain that to anyone. Whereas my little brother, again, much smarter, was mining ETH. And we were like, why are you doing that? Like, what's the point? Like, how are you going to, like, why does that have value? Whereas to our immigrant mom, if you can point to her and say, hey, this is just $1, but it's on the internet, that makes a ton of sense to her.
Yeah, and I love how even like Jeremy Allaire from Circle, I mean, they've really kind of run with this idea of just like internet native money, right? Where it's like $1 that's like, it's just something that exists on the internet. It's its own thing. It exists. It's something that's, you can just, it's like a bearer asset. Like I have it, I send it to you, and then now you have it. Like there's no, we don't have to go through any kind of like reconciliation process or anything to like settle like, okay, who actually owns this $1 now? There's no like third party intermediary like a PayPal, or no ledgers have to be reconciled, by some other third party. It's just if I'm handing you a dollar bill, like, okay, like I don't have it anymore, now you have it. You're the owner of that asset, right? And it's just it's that same concept just on the internet, right? And that can be sent anywhere, whether it's from me to you across the table or from me to you on the other side of the world, right? Like it's the same idea. And then, so maybe talk a bit about just the kind of the origin story of Sphere, and then what the trajectory you guys have been on so far. I know you guys had a funding round a couple years ago, and you're starting to kind of scale up right now. So just give us some color on the kind of the origin and the trajectory.
Yeah, briefly jumping onto what you mentioned, I feel like the end state of this stuff, as folks who kind of started doing stablecoin things when it was kind of frankly a dumb idea too. We got our start as, the whole SVB thing was happening. USDC had depegged. People were pointing to Tether as like, isn't that like the Tron like chain where like just like suspicious things happen, all the way to like, post bridge acquisition by Stripe, and every, large corporate or financial institution that we've heard of thinking about what is their digital assets and more specifically stablecoin strategy. Kind of having seen the gamut of that, I think in the end state, while the nomenclature might differ. If you think about the world in like 2050, that trend probably looks like no one really knows what stablecoins are, in the same way that no one really knows what M1 is or what composes M1 or M2. It's just an internet version of a dollar, and we won't even need that distinction anymore. And I suppose our journey is a reflective of that. We're hacking on blockchains since like COVID. Me and Luigi have been building software together for about a decade, and he did more of like a TradFi route. I originally did sensor, I suppose, like firmware engineering, full stack as well. And so again, very strange to find myself in the world of like crypto, payments, blockchains, finance. But Luigi was much more attracted to it, I suppose, because the income distribution is a lot more disparate in the Bahamas, where he spent a lot of time. And so he did like Vanguard, Franklin Templeton, a more traditional route. And this led us to experimenting on blockchains just because programmable money is quite interesting to two engineers. And although we didn't know it at the time, we ended up doing experiments that would later become well known as things like maybe Jupiter, or like a 1-inch if you're from the EVM space, kind of like aggregation across liquidity pools, which starts to resemble foreign exchange at some level, or MEV, max or minor extracted value, thinking about the data structure of a blockchain, which at its core is like, multiple hosted, append only, NoSQL DB. Like there are a lot of fancy ways that you can call this thing that, a blockchain, an L1, L2, but at its core, that's what it is. And so we were hacking, tried to do a lot of things that didn't really work that well, but ended up solving this payments problem over and over again. I suppose the lore is that, we were about to leave blockchain. I was about to go study auctions, auction theory, kind of like seeing what happens when people try to figure out how to do block ordering without first in, first out, which is like kind of historically how we handle things like internet traffic. Luigi was going to go work for Perpstex. And so we kind of just like YOLO submitted this payments thing that had been an annoying problem for us. And that ended up escalating to Sphere. One like a Stripe, Solana, a global track for payments, through some happenstance, ended up going through a jump trading incubator. And we're about to, legally incorporate. This happens a week after FTX's collapse. And we take a look back and realize, holy crap, there's not much left. It's a multiple month struggle to convince people to give us any money on Solana at the time, which is considered a dead chain. And Circle DPEG happens as we're taking in our first funds. So we again take a step back, realize that there are not that many companies left on Solana. There are not that many companies left. It feels like on blockchain. It seems like a lot of people are pivoting to AI. If you remember that meme,
yeah.
But there are some people who are really excited to talk to us and that we had never heard of before. They found our Calendly somehow. I think I had like one YouTube video of me at that point. And yet these are very successful businesses by any traditional measure. They service thousands of people, move millions of dollars of volume per year. And they just keep coming from the same parts of the world. That is to say, the emerging world, Latam, Caribbean, APAC. And what they're asking for starts to make a lot of sense. And we're like, well, no one else really wants to talk to us, so we might as well build for this audience instead. And that ends up becoming, I suppose, the stablecoin use case, which is a lot more well-known now.
That's super interesting. And I think you're kind of seeing in 2025 that thesis that you guys tapped into kind of almost just because no one else was talking, no one else wanted to talk to you, basically. So it's like, well, these are the people that have like real needs and real businesses, so we might as well hear what their problems are, right? If everyone else is fried. And in 2025, I think we've hit this interesting apex where I think with stablecoins, you have like the way I've kind of described it as like the narrative is finally caught up with the tech, right? The tech is always like these things have been around for a while. They're not new, like stablecoins. But now we're finally getting a lot more of kind of the infrastructure and the on-ramps and these types of APIs and things of that nature to make this stuff a bit more usable. But I think it's finally people are like the narrative is finally catching on a bit more like, oh wow, like this could actually be useful, right? And it's not just a crypto trading thing. It's not just kind of this like shady like offshore thing, or it's like, well, this is actually there's a real like application of this tech. You mentioned the bridge acquisition, the Stripe bridge acquisition. I mean, that would have been probably maybe 5-6 months ago now. As a stablecoin startup founder, like how did that moment? I mean, because a lot of people say like, oh, that's the Instagram moment for stablecoins, right? Where Facebook bought this like weird image sharing platform for $1 billion, and people are like, what the heck is this? And then now it's a huge thing, right? And it's totally transformed how content on the internet works. But I guess, do you agree with that, maybe that analogy that people have been throwing around? And then, but maybe just talk a bit more generally about what did that moment mean for stable coins as an industry, or like legitimizing stable coins as a segment of the financial system?
Yeah, it's a very interesting analogy, and we know the Bridge team well. I think we were one of their first customers, and Sean, their CTO, is an angel. Zach, CEO, used to be on our advisory board, and I kind of have seen their ascent from the front lines, helping to say like bring them to Solana as an example. I think it's directionally correct insofar as that you have a really well-respected fintech company kind of taking a stance on stablecoins and legitimizing the tech. And I think we already see sort of like the mimetic second order consequence, where you now have a tsunami of really smart people from fintech backgrounds or not, thinking about, okay, how post-acquisition do we either create a company to maybe take some of this market share, do it better, so to speak, or as an incumbent, well, if Stripe's doing it, they just took our lunch for the last 15 years. So clearly we must reconsider how we think about stablecoins. I think that it has some very interesting, again, second order, third order consequences where, the first order is that people are hiring like digital assets teams within large companies. You see a wave of startups emerge trying to do, bridge for APAC, bridge for Latam, bridge for, whatever. But I think the second order consequences are quite interesting. They're a little bit more obvious to us. Maybe I'll call it the 2022, 2023 cohort, just because we started when there wasn't that many people around and saw this at a miniature scale. But when you take the economic good that is stablecoin infrastructure, and I think later on, I'm happy to elaborate what exactly that means. When you're an orchestrator, when you're doing the sandwich, like what are the first principal inputs that go into that? Because it ends up not being rocket science, although it is annoying. It's not rocket science, but it's annoying. There's a race to zero that I think that is happening, at least for the USDC or T pair. That is to say that people are rushing towards creating companies around this new type of technology, not realizing that the technology, unlike maybe photo sharing a la Instagram, the whole point is kind of to send margins to zero. The traditional friction that a payments company and Web2 fintech could have, solved and took margin on, you kind of remove a lot of it with a blockchain. The notion of like siloed ledgers, as an example, in a world of, I'll call it first stab regulatory clarity, it's very difficult to price compliance risk in, and therefore it's not accurately reflected in the cost of a stablecoin transaction. The nature of wallet addresses on chain, being able to, I can make like 1 trillion of them right now if I wanted to. And therefore the difficulty in labeling who exactly you're underwriting as a payment processor, as an example. I think there are some fundamental designs, bugs, features, it really depends on how you think about it, that lead to what I like to describe as great filters or realizations for folks who are getting into the stablecoin space. And we started off with crypto native payments, like crypto to crypto. And that if stable coins are hard to make money, build a company around, that's that on steroids.
Let's talk a bit more about what you alluded to earlier with talking about this stablecoin infrastructure stack and like what that all means. Because this is I'll confess, this is an area that I'm familiar with stablecoins. I've used them. Like I know people that are building these companies. But then it seems like over the last 6 to 12 months, there's just been like this explosion of companies that are either starting up as stablecoin infrastructure, and they're kind of marketing themselves as that, or they were doing other kind of blockchain infrastructure, and then now they're seeing all the hype around stablecoins. So they're kind of pivoting and be like, hey, we're doing stablecoin infrastructure too. But like, what all actually goes into that stack, right? Like, obviously, there's wallets, there's like fiat on and off ramps, there's compliance stuff, but like, how much is there, kind of under the hood that people need to know about when they're deciding, like, should I use one of these products or should I build one of these products, or like, how does this stuff work?
I think I'll describe like a scale of front end to back end. And the front ends don't change that much. You can brand yourself as stablecoin oriented, leverage more APIs behind the scenes that plug into maybe DeFi or compose across different application types on blockchains. And then you have what is a front end stablecoin app. Can be thought of as like a new type of bank, a new type of neobank, or it could be thought of as like a better Venmo, so to speak. I think if that doesn't change that much, there are some significant differences on the back end, which is another way to say, what is a stable coin and what does it mean to build infrastructure around it? we're engineers, so I apologize in advance, but we probably like to think about things from first principles, which is stablecoin. I have money sitting somewhere. Where could it sit? Maybe it's at a broker dealer, maybe it's at a bank, maybe I've even lent it out. But fundamentally, I am minting tokens on a chain, promising that those tokens correspond one-to-one to money that is sitting somewhere. It could be in the form of cash or cash equivalents. It could be in the form of securities, like fixed income instruments. So that way the stablecoin generates yield. But core to this is the promise that you mint or redeem this token, and I'll give you the real money back. And it's basically done only by private issuers today, Circle and Tether being private companies. Of course, there are many more who are coming to market, USDG, via Paxos. The last time I came to Brazil was interesting because it felt like almost everyone I talked to was thinking about issuance of stablecoins because they saw Tether. And Tether is probably objectively like the most successful tech company that's ever existed. If you just think about it from a dollars earned to...
Yeah, it's the money printing machine, right?
Exactly.
It's insane.
And, this obligation is historically set with banks, which have the unfair advantage of being able to do fractional reserve banking and leverage out their balance sheets. But, what is infrastructure surrounding this? There are ways where you can make the entry points into this system that I just described easier. For folks in orchestration, it could look like aggregating a bunch of these service providers, issuers, liquidity providers. But realistically, some bank who has the legal ability to custody money or a trust to custody money is going to take in real money, quote unquote, and give you this tokenized money. And the devil is in the details for how that money gets in and out. But whether it's a wallet, whether it's a liquidity provider, whether it's an orchestrator, money transmitter, VASP, it kind of centers around making that core function easier. And I think the delta isn't really... Of course, you could just advertise better and distribute better, and there are many such cases. But I think that over time, the distinction will essentially come down to compliance and risk management. Because when you have an ecosystem with no circuit breakers, for those who remember the GameStop craze a couple of years back, Robinhood halted trading because it could have made them go bankrupt. Kind of the design of these existing ledgers is that there are no circuit breakers. And so you can have runs on banks who are underwriting the issuance of the stablecoin themselves. And so, compliance and risk management, whether you're an orchestrator or an issuer or an exchange or a wallet, that's probably what it will come down to. But, it's an unsexy topic that takes time to kind of play out. And so, hopefully that starts to paint a picture of what I mean by the infrastructure stack.
Yeah, that's super interesting. And I think that's one of these things that I think, sometimes folks have a like in the case of, USDC or USDT, these things aren't always backed one-to-one with actual dollars too, right? I mean, I know Tether and Circle have different approaches for how they manage their treasuries and whatnot, and they have different assets. I think USDC might be more closer to one-to-one backed by dollars, and then Tether is more they have highly liquid instruments like US Treasury bills and stuff like that. But it's there could be a run on the bank, on the theoretical bank here faster than they could redeem all these things for actual dollars, right, and pay people. So there's a lot of issues here. There's no circuit breakers built in. It's not to say there couldn't potentially be circuit breakers built in, I suppose, in some fashion, but yeah, it's what you're saying. All the unsexy stuff is really what's going to kind of make or break the successful service providers in this in this particular space, right? Yeah. Let's use that as a jumping point to pivot back into what you guys are doing specifically, and we talked a little bit about Sphere Pay earlier. We touched a little bit on Sphere Net, but I'd love for you maybe to give us a dive into a bit more of what these products are, and then maybe kind of what the current state of these products are, and what's sort of the what's the grand vision here for each of these. And after we do that, I want to touch on how this applies here in Latin America and countries like Brazil. But maybe we can touch a bit more on just kind of what specifically you guys are building. Give us some more kind of color around how all that works, and then we'll dive into some of the practical use cases.
Yeah. So Sphere Pay, I think inadvertently we've built, to my knowledge, what is the fastest on and off ramp in the world, or the fastest way to do a cross-border payment without someone taking credit risk. If someone uses Wise or Remitly or another, cross-border payments application, it's going to feel basically instantaneous in a lot of cases because the platform is taking credit risk and making the market. They already have money sitting in the country that you want to send the money to. So as soon as you tell them, hey, I want to transfer my original money they'll send it out in the destination currency and take the credit risk as they wait for your money to hit them and rebalance their books. Whereas in our case, we're doing this atomically. So the money first has to go through the whole journey. There's no money leaving at the very end, at least in the way that historically we've done it. So, how do you make that happen? We got very lucky. We ran into, and one of our first hires on the risk side was an old school Wells Fargo wire room operator. And, wire rooms are not sexy. They've never been. In the 90s, if you're graduating from like Harvard and doing economics, you're probably trying to go to front office and be like an iBanker. Nowadays people think about FANG and like running a company, but there's so much interesting information that goes down into when you think about reverse engineering minute by minute what happens in the wire room and being able to pack more information in such that the transfer ends up happening faster. And so this is kind of why people use us. We're, mostly B2B, mostly fintechs within emerging markets that struggle not to get access to stablecoins, but it's all the steps that happen before and after, making sure that they're able to move size, making sure that it's able to stay robust, doesn't just turn off one day, and making sure that it's fast. Because a phrase that I like to use is that, there is no Silicon Valley of Chile or of like Costa Rica. And so capital efficiency really matters to our customers. They're able to recycle their capital multiple times a day. And is a feature, I think, that's quite pronounced in Latam, where dollar account access might be more difficult, or the ability to escalate, say, a transfer getting flagged requires like, an American compliance person to read through corporate documentation that's in Spanish or Portuguese. And so, that business has scaled quite a lot since we first started in a time where it was kind of a dumb idea too. Currently, it's processing billions of dollars per year. A lot of the flow that we see involves APAC, LATAM, US, Europe, essentially the major regions. But I think that a core, emphasis for us comes back towards weird factors that you wouldn't expect. Demographics, time zones. Turns out that it's very useful to be on the same time zone as the issuing, entity for the currency. In our case, Federal Reserve for the USD. It allows you to do certain things within the transfer itself on the fiat leg, because the stablecoin part is easy. Like in one line of code, I can just call web3.js and move a stablecoin from A to B. But the hard part is in, the messaging as well as the compliance and risk management that go towards making the financial institution that is acting as the counterparty, whether it's in the entrance of the cross-border payment or the exit of the cross-border payment, comfortable. And that's kind of the state of Sphere Pay. We're growing increasingly active, of course, within LATAM, borrowing from some of the lessons that we were lucky to stumble into the early days, with local presence, personnel, relationships with financial institutions. We're doing the same in the United States, of course, historically being more of like a data optimizer and now more directly stepping into the relationship with the rails. And we're now 28 people, scaling from 7 last year.
Oh, wow.
And from basically 1 million to now billions.
Wow. Binance is the largest platform for digital asset trading, with over 250 million users around the world and over 350 trading pairs. Access best-in-class products and services for investors and advanced tools for institutional players. Liquidity matters. Security is non-negotiable. Join Binance today. Well, let's kind of double click on Sphere Pay here, because this is, you guys have, as you're saying, that you guys have scaled pretty massively here in just a very short period of time, and have really seemed to find a the buzzword in crypto, product market fit, right? We have a product that people actually want to use. It's great. Maybe talk a bit about how does your customer segmentation, if we were to kind of paint a broad picture of who are the types of entities in Latin America or in the US or wherever that are making use of this product, whether they be on the B2B side or whether they be more on the retail side, I suppose. Sounds like it's more of a B2B focus at the moment, but give us a general sense of some of the customer segmentation here, and then also some use cases that can maybe help folks just to kind of better visualize just how this all works.
Yeah, so definitely mostly B2B. The businesses that we service that excite us at least are the ones that also make sense. People have been shipping bananas from country A to country B for hundreds, if not thousands of years. And so whether it's a stable coin, it could be a toaster. the underlying tech that enables that reconciliation, that process to happen faster and cheaper, that's really exciting to us. So it ends up being a lot of import, export businesses. It could be within anything from, metal, fabric, oil, raw materials, manufactured goods, apparel, all the way to like software companies that are trying to manage their treasuries better. There is a segment of fintechs that we partner with closely. They're like both customers and vendors. And, the use case for them is internal reconciliation. I once joked that like all payments companies become compliance and risk companies. But I think that the part that's harder to see is all compliance and risk companies, if they have any exposure to funds, eventually become inventory management companies. And it's sort of like running a McDonald's in 10 different countries. And you have to figure out how many buns, lettuce, burgers you need to keep at each one, and how you move the ingredients between different places to make sure that you satiate customer demand. It sounds a little ridiculous, but that's what a lot of this ends up becoming.
Instead of buns and hamburgers, and tomatoes, it's stocks of each of these local currencies, essentially, right?
Exactly. I think like the way that you distribute that labor is really important. And it's kind of like a nice thing if you're coming from more Web3 native roots and you saw kind of like the dream of like self-sovereignty, of autonomy, of like more, I suppose, power to the individual. And then, you run into the wall of compliance, of risk, of making sure that, bad people aren't doing bad things with, money. It's kind of nice that you start to be able to realize some of the economic efficiency that is only possible when you distribute the labor that we just described. It turns out that you actually do want a ton of people who supply lettuce, as an example, as opposed to just one large corporate like McDonald's monopolizing the whole thing.
So is the primary use case for this service, is this really on the cross-border front, or is there a play domestically as well, or does the secret sauce here really kick in when there's a foreign exchange transfer that's involving the stablecoin? Is there a domestic applicability to this type of solution as well?
Yeah, I think like the super sexy like step function for species is within the cross-border, because a lot of this comes down to sovereign nations and each one developing their own variation of real-time payments. In Brazil, like there's Pix, right? It's amazing. But it'd be very difficult to take like a thought experiment for Brazil to compose in real time with, a foreign country that maybe it doesn't have the best relationship with. And so these ledgers are very nice conduits between these real-time payment systems. I think that stablecoins are still quite relevant domestically if the infrastructure within the country hasn't gotten to that point yet of where they're able to get something like a Pix. But in the grand scheme, the 10,000x unlock is how do you orchestrate between FedNow and Pix and UPI and PayNow and all these different RTP systems that are just going to get better and better.
And that is an issue that folks have confronted in Latin America, is that a lot of these countries are building out their own have real-time instant payment, settlement networks that are domestic, right? It's great if you're in that country, but then if you're trying to send payments in Mexico, that's a little bit of a different task, right? And there's been some efforts in Brazil to basically bring about like internationalization of Pix and trying to kind of interlink some of this system with systems being developed in other countries. For example, there's a lot of countries that are even trying to kind of just copy Pix outright because it's been so successful. So it's like, we'll just copy what they did because it worked instead of building our own thing. But yeah, like to your point, like there's going to have to be some sort of reconciliation of all this stuff somehow that is seamless, that doesn't involve emailing Excel spreadsheets back and forth. Like there's got to be like some way of doing this in a way that's a bit more automated and just like publicly, having like a publicly available kind of ledger that's sort of reconciling all these things in the back end. So that's super interesting. And I think as people start understanding, I mean, we live in a globalized world, right? Like any transaction is like an international transaction in some capacity. Like as a gringo who's spending a lot of time in Brazil, it's like I end up paying for a lot of stuff with an American credit card. Mm-hmm. And it's like, well, that's like an international transaction, right? Like even if I'm buying like bread at the padaria, it's like an international transaction, right? Yep. Essentially like a cross-border payment, So as we're getting into this, this world where like every transaction is essentially like an international transaction of some sort, like these types of like, there's a new impetus for really focusing on like how can we make these systems more efficient, right? Now we actually have the infrastructure to do this. We have blockchains that are scalable enough to be able to like handle this transaction volume, et cetera, et cetera. And we have, to your point, like a lot of the compliance and risk stuff, the infrastructure around this technology that has really kind of going back to my earlier point, it's enabled like the narrative to finally catch up with the tech, right? Like we have the narrative, but we also have the tools that are going to make, the compliance officer at a Fortune 500 company not like, sweat bullets at night, really, have nightmares and whatever. So that's super interesting. And I think I'm really excited to see kind of how this really kind of pans out here in the region in 2025, because my personal thesis is just that like Latin America is going to be a very critical, probably the critical region in crypto in 2025. And stablecoins are a big part of that narrative because you have lots of stablecoin companies popping up, and these companies need users. And it's like, where are you going to find users? Like, well, Latin America is a good place to find them, right? But there's also a lot of need here for this product. It's not just there's a product market fit here that I think yourself and others have really stumbled upon accidentally or otherwise, but like you found it, right? Which is super cool. And maybe talk a bit more about like just how you see the importance of, perhaps emerging markets generally, but like maybe let's kind of focus more on LATAM specifically, because you've been spending some time here. But like, how do you see LATAM as like really perhaps, kind of carrying the flag or carrying the torch, right, in this stablecoin movement right now?
Yeah, I put my money where my mouth is. It is, for the adoption of this technology, the most important region in the world. More important than US or Europe or, in terms of an adoption perspective. And I think it's because the use case is so concentrated. Like, there are tons of reasons why it makes sense. From the history of the region writ large, I'll describe it like post-World War II and the formation of international institutions, to things like internet adoption. Like if I was looking at a chart not too long ago about internet penetration in the U.S. In 2001, Brazil had 5%. The U.S. had just hit about 50%. Then you fast forward 12 years later, you get to 2013, and then Brazil, Costa Rica, a whole cohort passed 50% for the first time. And so there's something to say about the general growth of internet activity, of e-commerce. It could be any type of software. That software needs to make money somehow on the internet to continue to survive. And that's when, all of those companies become fintech companies, and therefore all their users indirectly or directly become fintech users. And so stablecoins as a medium for attracting, foreign capital, or for making composability between regional transactions, Brazil maybe to Argentina or to Uruguay or what have you, it all being on the same time zone as the issuance country of USD as an example, but it could be, any of the local currencies. It could be BRL, it could be COP, it could be CLP. And I think the strong existence or presence of like natural resources and import-export as goods passing from Asia, as an example, to Europe. It will go through the Pacific and then the Atlantic. There are all sorts of maybe unexpected reasons why stablecoins are kind of leading, I think, in LATAM. It could even be political, as a conduit for a user to be able to receive any currency account that they want. But I think that the timing is really, it feels like a perfect storm. If you are from the United States, we've had like an engineering curriculum that involves the internet since the 90s, if not earlier, pre-commercial internet. The path of becoming, say, starting a fintech is a lot clearer. Mature markets, financial markets already exist. You can get access to yield. You can, get, an account and interact with brokers. You can kind of interact with any market that you want in the world. And a lot of these same things are not true from even a time perspective for a lot of the end users that we see from, the people that we work with in LATAM, including a lot of teammates. And so I agree with your point. I think that 2025 is a really exciting time, both for stablecoins and also for the LATAM region. And I think it comes down to a confluence of factors, and stablecoins end up just being an impact multiplier for a general trend towards e-commerce and fintech that we're already seeing. The transition, as an example, from cash to digital forms of money. And it just turns out that from like a pure math economic perspective, it becomes cheaper and faster, more robust, more accessible for the average person here to be able to touch any market that they want. And, that's probably the way that it should be. It probably should be the case that any person smart who wants to like create a business can interact with people from Indonesia or from MENA or from Europe. And given that the dollar, plays a role in 90% of global foreign exchange, the liquidity, again, puts the money where the mouth is. There's a good reason why these markets are the most liquid in the world, with like $8 trillion of daily turnover. I think Elon like once called like the internet the nervous system of humanity. Maybe a bad analogy is like to think of money movement as the blood, because there's still data packets moving around. They just happen to represent value. And this data structure of a blockchain just makes it that much easier. Finally, you are able to, properly get blood into your leg or like your arm so that it doesn't fall asleep. And so I think that there are just like too many reasons to list. We could probably do a multi-week, a grind session of like listing out all the explicit, obvious, and to subtle reasons why it's a perfect time for this technology, broadly to matter, and specifically from Latam.
Well, I think you've done a really good job here of just articulating that value proposition, which I appreciate. And you've clearly put a lot of thought into this, and you've obviously spent like a lot of hours in the trenches building and researching and trying to understand like why this stuff is relevant and important, right? And I think you've hit on some good points here that resonate with me, in that, this isn't just an efficiency play. This isn't just like, we're trying to save 3 basis points on transaction fees or whatever. And it's like, yeah, that's helpful, but it's really like an opportunity play. It's really about trying to create, like, for me, like, I guess, the reason I'm so excited about crypto and these systems is, it gives you the ability to basically bootstrap like alternatives to like legacy institutions, to create competition with kind of legacy institutions that create value for everybody, right? Whereas, with finance, it's like, okay, these are like heavily regulated industries worldwide. It's not the easiest thing to just spin up some competition to it, right? And I think with stable coins and with crypto in general, you have this vehicle for. And it's not necessarily like this cypherpunk thing of like, we're going to take down the evil banks, but it's like, no, it's like, but you create competition, you create alternatives, you create like superior means of transferring value, of giving people access to, markets that they weren't otherwise able to access, alternative systems for even just kind of coordinating behavior and things of that nature. And that's where things get really exciting to me. It's like, so for me, it's like, initially I was like, well, like stable coins, like, okay, it's interesting, it's helpful if you're trading, whatever. And like, okay, it's a little bit, it's like 3 basis points cheaper. It'll like, send money back and forth to people. Like, okay, it's not really that interesting, But I was kind of always like, really, like, why are people so excited about this? It's like, I get why it exists, but I'm not like that excited about it. I love your reaction to this, but like, I guess just the point I'm trying to make is like, this is really the stable coins. This is like the infrastructure for enabling like this expansion of opportunity, this enabling these new models, these alternatives to existing systems, whether they be governments or financial institutions or whatever it might be, that are going to bring about new efficiencies and new competition that's going to ultimately benefit everybody, right? And ultimately, like, just it's the rising tide lifts all boats type of metaphor. Anyway, so that's my soapbox. Would love your reaction to that, and then we'll close it out here.
Yeah, no, I think you hit the hammer on the head, or the nail on the head. Sorry, like structural deadweight loss. Like, that's the use case. Software in general is making the world richer. This blockchain tech is just a convenient way to democratize it. And, if you think about the world, there's like 300-ish trillion in like global GDP. There's a lot of wealth generation today that's concentrated in the most developed markets. And a good part of that is because they can compose easy with each other. I can start a business in Europe, easily sell to Americans, vice versa. The underlying are the resources that exist within these two silos. Or, pick your favorite developed market, Australia, Japan, what have you. The amount, though, wealth that is possible for the species writ large is insane. If you think about this from like, just again, a math perspective, first principles, how much like unlocked labor potential is there if you are able to allow some random guy from like the Bahamas to plug into the rest of the world? If that person can get capital in a way that they weren't allowed, whether because they can't speak the same language or can't present to Sandy Hill Road or whatever in Silicon Valley, as well as, a Harvard grad, like how much more could that unlock? And, the favorite heuristic that I have for this, once you do the math, we're not talking like an order of magnitude of trillions. We're talking an order of magnitude of like tens, hundreds. We start to get to Qs of wealth generation that's possible that you just like can't report in like a consulting report today, because you're describing a hypothetical world where like 2 billion plus human beings come online for the first time. My co-founder Luigi, born right in the Caribbean, raised in the Caribbean. This like example, I think, hits the idea home to me the best, at least. If you're a smart person in the Bahamas, population is 300K. Like, what do you do? Like Stripe, Shopify, they don't really service the Bahamas because it's not really worth the headache for them. Even if you're an entrepreneur in the Bahamas and you try to create a local Stripe, like your TAM is still 300,000 people, and like industries mostly focused on tourism. So the most likely path out is to get brain drained, right? To go to a developed market, create a business there, and then hopefully come back and bring some wealth back. but you need like a Mark Zuckerberg or like a Bezos or like, some insane level outcome or
Sam Bankman-Fried.
Sam Bankman-Fried, rest in peace, to like meaningfully make a dent. And the same thing happened in Korea. That's how I know.
Okay.
Samsung, LG, like the whole wave of chaebols, like turned this like very small country from like nothing to a G15 country. And so either you get very lucky or you give the entrepreneurs or would-be entrepreneurs locally a way to touch every other market without having to leave. And I think that's really the unlock of this stuff. Like you can boil it down into like, efficiency gains as you described, or a way to buy, equities or securities from like the US or Europe or something, a way to, buy different assets. But I think the key unlock is that you no longer need to speak the same language or convince someone from who already sits at the table to be able to start that virtuous cycle that doesn't exist and unlock the structural deadweight loss.
Yeah, that's super interesting. And I mean, this brings up, you bring up a point that I guess I haven't necessarily thought about it in this way. You've put together the pieces here really nicely in a way that I think is really, really worth maybe doubling down on here. But you almost have these tools, these pieces of infrastructure, like your Shopify, your Stripe. I mean, even to some extent, like your big crypto exchanges, right? Your big centralized exchanges, like your Coinbase, your Binance, whatever. They have kind of become these like core pieces of infrastructure of the internet, where it's like, oh yeah, anybody can just spin up like a small e-commerce site and you can sell your crafts or whatever, your homemade, you can sell whatever your cookies or whatever you're doing. You can just spin up a site and do it. But like, well, you kind of need like a Shopify account to do that, or you kind of need like an Etsy account, or it's like, oh, anybody can just go buy crypto now. You can invest your money in Bitcoin. It's like, well, what if you live in a small country where like Coinbase isn't going to bother going in and trying to get a license in Guyana because it's not, it's like, what's the point, right? So it's like, well, if you're in Guyana, you're like, well, I want to buy Bitcoin. Like, how do I do that? It sounds great, but like, how do I do that, right? We've kind of the internet, or like the kind of this internet economy that we're talking about is really centralized around. There's these core pieces of infrastructure that like are available if you're in the developed world, and even to some extent, even in like a place like Brazil, which has a lot of this stuff. But if you're in a lot of these other countries, like it's like, yeah, I'd love to tap into that, but how? Like what's the, I'm not going to go build my own because there's 50,000 people that live here, so it's pointless, right? So that's a really interesting point that you raised, and I've never thought about it in that way before. But like, yeah, opening up these opportunities to folks that they just didn't win like the geographic birth lottery, I guess. Like they just happen to be born in a country where it's just not worth the effort of these companies to try to come in and necessarily provide those services in that place because it's not a big enough market. But like to kind of close things out here, let's talk a bit about your roadmap for the rest of 2025. Like, what are you guys looking to do? And I guess LATAM's focused, or just more generally, like what should we be expecting to see from Sphere over the coming months here?
Yeah, you'll hear a lot more from us as the year progresses, because in the same way that the business has kind of grown to a scale that we couldn't have predicted in the last year, we've taken the output of that and invested into this region. Of course, in Brazil, LATAM broadly, and it looks like everything from the first hires locally to building out the first sales team, the first marketing team, of getting our local compliance policies set up, of making sure that the foundations are set right. And so that way we can borrow from some of the techniques, performance optimizations from like the US and USD, Fedwire, to things like PIX, Brazil, SPAY, Mexico, being able to do internal reconciliation that much faster. And so for the end user, it might look like, you see the name Sphere more, but our goal is to service the already existing providers here and just give them faster, cheaper, and, ideally this reflects into the user experience, more robust cross-border payment. And so there are a lot of mini roadmap items, from like adding support for a given payment method to getting a specific entity stood up and local partnerships done. But I think towards the end of 2025, you'll probably see a lot more, at least within the Web3 and I suppose a more traditional financial institution perspective, about SphereNet, which is kind of a way to borrow from the blockchain primitives and properties that we really like and use it to coordinate between more traditional financial institutions better. It's like, how do you juice Web3 and the mechanism design that we've been discovering across, all the noise within the trenches, and, pick your favorite meme coin. How can you take those gems in the rough and make it so that way even a small credit union can really benefit from the coordination or the settlement or the composability in the same way without needing to invest millions of dollars that they don't have into getting stood up with the tech. So that's the general roadmap for 2025. Yeah.
Well, Arnold, I really appreciate you coming on the show. I hope you had a productive visit here in Brazil this week. But it was great meeting you in person. And yeah, I've been following you guys for a little while, just kind of loosely. And it's really exciting to see what you're building. And I'm really excited to see what you guys have rolling out in 2025. So thank you again. I'll turn it back to you for any final thoughts. And then how can folks find you if they want to connect or learn more?
Yeah. On Twitter, we're sphere_labs and @sphere as well. We're also active on LinkedIn. Our website is spherepay.co or sphere.net. And so please feel free to reach out if you're thinking about how do I, get charged less for supporting my multinational business, or thinking of starting a company and want, global market access from day one. Then you don't have to worry about the annoying stuff and getting bank accounts everywhere stood up, etc. And yeah, I think that's it. Really appreciate you having me here. And it was a fun combo.
Yeah, pleasure's all mine. Appreciate your time. And thanks everyone for watching. And we'll see you next time on Brazil Crypto Report.